Welcome back to another episode of The Week That Was, where we bring you the key highlights from the week that just went by. This week, the market performed well as Nifty Midcap and Smallcaps gained over 2% each and clocked fresh all-time highs. We may see Nifty move towards the 20,000 level in the coming weeks. So any dips from here on can be seen as buying opportunities with a strong support at 19,400. Speaking of market outlook, Morgan Stanley has suggested the following three scenarios for the Sensex over the next year. 1. The base case scenario. The Sensex is expected to hit 74,000 by December 2024 with a 50% probability, assuming there will be continuity in the government, oil prices remain stable, and US does not slip into a protracted recession. Second, the bullish scenario. There's a 30% probability that the index can soar up to 86,000. This is assuming that the oil prices fall below the $70 level, the US growth cycle renews, and there are healthy bond flows. Third, the bearish scenario. The index may fall to 51,000 if elections deliver an unclear mandate with a change in government, oil prices surge past $110, the RBI tightens for macro stability, and a US recession leads to global growth lower. On the 16th of November, RBI announced raised risk weights on unsecured consumption loans, credit card exposures, and loans to non-bank finances by 25% each. This announcement comes after months of notifying lenders against the ongoing credit frenzy, hoping higher capital requirements will slow such rapid growth. Outstanding as well as new consumer credit loans, including personal loans by both commercial banks and NBFCs that currently attract a risk weight of 100%, will now be raised to 125%. This change is not applicable to housing loans, education loans, vehicle loans, and loans secured by gold. Credit card receivables of scheduled commercial banks and NBFCs will also increase by 25%. Commercial lending stands impacted too. Bank loans to NBFCs will also attract a 25% higher risk weight. For example, a bank lending to a AAA rated NBFC has a recommended risk weight of 20%, which will now be increased to 45%. MSCI Global Standard Index will add 9 Indian stocks to the index. The Morgan Stanley Capital International, or the MSCI indices, are widely tracked globally by passive funds, and any inclusion or increase in weightage of stocks in these global indices are expected to lead to inflows from passive funds tracking the indices. Foreign portfolio investors generally use the MSCI index as a gauge to allocate their passive flows. This is expected to attract further foreign inflow into Indian equities. 2 IPOs are slotted for the 22nd of November. First up is the much awaited and talked about Tata Technologies Limited IPO. It's the first IPO from the Tata Group in 2 decades. As a product engineering company, they provide services in engineering and design to automotive and aerospace original equipment manufacturers. This IPO is an offer for sale for up to 6.1 crore equity shares. The company reported 4,400 crores in revenue in FY23 and a 63% profit growth year on year. 10% of the issue size is reserved for retail shareholders of Tata Motors. The second IPO, Fedbank Financial Services Limited, is a retail-focused NBFC. The IPO is a book-built issue of 1,092.26 crore rupees. The issue comprises of fresh issue of 600 crore rupees and an offer for sale of 3.52 crore shares. And that covers the key updates for this week. We'll see you next week as the week that will be becomes the week that was.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.